the UK economy is projected to experience a meager 0.75% growth this year, delivering a significant setback to Rachel Reeves's efforts to bolster economic confidence. Reeves's ambitious growth plans have encountered a double whammy, following the Bank of England's drastic halving of its growth forecast for the year and its stark warning of escalating price pressures impacting households. In a decidedly pessimistic assessment, coinciding with a third interest rate cut in just 6 months, the Bank of England, headquartered at Threadneedle Street, cautioned about an impending renewed squeeze on living standards due to persistent inflation, even as the economy teeters on the brink of stagnation. This gloomy prediction comes just a week after the Chancellor delivered a major speech reaffirming the government's unwavering commitment to economic growth. The bank's revised forecast reflects the fragility of both business and consumer sentiment, coupled with near-stagnant economic activity in the aftermath of the October budget. The implication is clear. The government's economic strategies are failing to yield the desired results, casting a long shadow over the nation's economic future. Susanna Streeter, the head of money and markets at Hargreaves Lansdown, offered a succinct and concerning summary of the situation. The risks of stagflation are stark. Inflation remains stubbornly above the bank's 2% target, and price pressures are relentlessly mounting. Simultaneously, the economy is stagnating, and business confidence has suffered a significant blow. This potent combination of high inflation and slow growth paints a bleak picture for the UK's economic. The looming threat of stagflation, a period of slow economic growth and high inflation, significantly increases the complexity and challenges facing policymakers. Last month, Reeves found herself under intense scrutiny amidst a surge in government borrowing costs, exacerbated by prolonged expectations of higher interest rates in both the UK and the US. This escalation sparked widespread concerns that Reeves might be compelled to implement unpopular measures, such as tax increases or drastic spending cuts, to prevent a breach of her meticulously crafted fiscal rules. The pressure is mounting, demanding difficult choices that could impact various segments of the population. Reeves's comprehensive plan for economic revitalization centers on facilitating private sector investment in crucial infrastructure projects. A key component of this plan involves paving the way for a third runway at Heathrow Airport, a project intended to stimulate economic activity and boost the nation's connectivity. However, the Bank of England's pessimistic forecast casts doubt on the efficacy of this strategy, raising serious questions about its ability to generate the anticipated economic benefits. The current economic climate necessitates a more comprehensive and robust approach to address the multifaceted challenges facing the UK economy. The government's commitment to growth remains to be seen, and the pressure is on to deliver tangible results amidst a climate of uncertainty and mounting economic headwinds. The success of Reeves's plan hinges on the ability to effectively navigate these turbulent waters and implement strategies that can stimulate growth while mitigating the risks associated with rising inflation and stagnant economic activity. The current situation demands a decisive and comprehensive response, one that goes beyond incremental adjustments and addresses the underlying structural issues that contribute to the present economic malaise. The coming months will be crucial in determining whether the government can successfully steer the UK economy towards a path of sustainable growth and prosperity.